In today's video, I just want to go over an example of how you can use a stop with the setups. And I'm going to look at a trade that we had in Netflix. Now, what we had here was basically a pullback to a combination of a 618 retracement of a prior swing, and then also a 100% projection. It was of one of these other prior low to high swings. So the resistance came in at the 502, 507 area. And if you go down to the lower time frame chart, you'll see that it did trigger. So I'm going to use a 15-minute chart for an example. Okay, so here, is where we tested the resistance. And then your first trigger is when we both take out a prior swing low. So you took out the 492.31, and then just slightly later than that, you finally had the crossover as far as the 834 EMA crossover. So let's say you get short there. So how are you supposed to trail a stop? I mean, typically, we like to look for the initial downside target. Some people will just take profits there, but there's a lot of times where the market will give you way more than the first target, so you might be better off trailing a stop. So you can see that we did make one target off of that last high. But there's two different ways that I'm going to talk about as far as trailing a stop. One of them will be when it takes out a prior swing high. That can stop you out of a move, okay? So you would have been entered around this area, and then after we came back through this prior swing high, that could be a stop, okay? Now in this case, we did end up going lower again after that, but I'm also going to show you the other way that you can trail it. And that's basically looking at the moving average crossover, okay? Because if it does start to move in your favor, if it crosses back to the upside, then that's when you exit. Now in this case, we did not cross back to the upside yet, so if you use the moving averages instead, you'd still be in the trade. And it's going to be different with different setups, but those are some things you can work with. And it's just pretty much the swing highs and swing lows, or the moving average combo. If it flips back the other way, you'd want to get out of the way.